Let's shift focus now to the precious metals and the rally that we are seeing unfold there. Ajay Kedia ji is with us. Ajay ji, this has been an unprecedented move on both gold and silver. Silver rather than gold is what has surprised many investors in terms of the rally that we've seen. We have not even finished the first month of 2026 and silver prices have shot up nearly 60%. Over the last 1 year, silver prices have shot up 200% in the kind of returns that silver prices have given investors. It has sharply outpaced even gold prices that have rallied, of course, and that too at an unprecedented 80% over the last 12 months alone. But compared to gold, silver has definitely been outshining this space. Give us an understanding, why is there no pause on this kind of a stunning move that we are seeing on gold and silver? This is leaving investors gasping for breath every day when they wake up with fresh record highs on gold and silver. What should they be understanding what's happening?
Very good afternoon, Sakshi. But definitely in last 27 days, we have seen a tremendous rally in silver. It's to the tune of almost 300%. And especially from the 1st of December, when China came out with a restriction policy for their critical metal or rare earth metal, that was a totally game changer. In fact, the price for domestic market was around 2 lakh and today it's quoting around 3,82,000. That's also counting because every day 20,000 price movement is going on. So first of all, geopolitical tension, tariff concerns and restriction on exports, shortages, this story continues to going on. There is a sign that whether this is a commodity bull run or now it's turned to mania, because this type of volatility on 26 we have seen market in international has opened at $101, went to a high of 118 and come back to the level of 102. So this type of volatility is a sense of mania only. So I think slightly be cautious at current level. No doubt fundamentals are still supportive. We expect a next level could be $136. That is actually a number only. But I think as an investment point, we should be stay away as of now, because historically this metal gives a return of, let's say, 20-25%. But currently in last 1 year, 300% is a we can say things has already been exhausted. So stay away slightly, wait whether there is a correction.
On that point, what you're saying that, you want investors to be cautious, you want them to stay away, yet you are projecting that there is no, doubt that silver prices could move up from 117 to 136. That means another $17 it can still move up, but still you are cautioning investors to stay away. What is the reason behind it? Do you see some kind of a bubble in gold and silver prices at this point in time? Can it burst anytime?
It's not a bubble, because in 1980 there was no industrial demand. In 2011 there was limited, but this time industrial demand, shortage, everything is in line to support this. But the momentum which we have seen, margins are high and momentum are going on, that could be a little bit tricky. That on 26th we have seen 17% fall in silver in a single day. So I think a corrective dip is possible to the tune of, let's say, 25-30%. That is why we are just cautioning our client that be cautious at current level. Otherwise, any like a geopolitical tension cools off, then definitely there could be a profit booking coming back on silver.
Okay, so in case even if we see that 25-30% correction on silver due to any reason, profit taking and cooling off of the sentiments there, then should investors look at buying? Should a 25-30% downtick offer an attractive entry point at all, if not at record high levels right now?
True. Because I think a corrective dip of 20% what we have seen in the month of October, that has bring back this rally. So I think from current level also, there will be a correction, then consolidation. That could be a fair price to re-enter in silver, because current fundamentals still remain bullish unless and until the supply is reinstated or tariff concern from New York and London completes out. I think prices should be on a positive side only, but after a corrective dip, we should take a entry.
Okay, what about gold? Are you staying away from gold also at this point?
See, as gold-silver ratio has dropped by almost 54%, currently trading at 45, that means gold is now normal. Previously, we used to say gold is slightly overbought, but comparing with silver, I think gold is now corrected very well, consolidated very well. And with the given geopolitical tension and tariff concerns going on out today, there will be a Fed meet which will be giving a clear idea about the interest rate cut in 2026 by Fed. But I think a correction is due for gold also. But looking the furious rally what we have seen in silver is not a part for gold. So we are bullish for gold, but higher side would be kept towards 54-20 on higher side. Whereas today's Fed meet will give a complete idea about how the gold will be performing for next few months.
If somebody has this compulsion that you have to buy something between gold and silver, will you choose gold today at today's price?
Yeah, look into the gold silver ratio. I would be preferring to have a gold, but that too in staggered manner or SIP manner, so that whenever there is a correction, it should add more unit to me.
Okay. In fact, let me also bring in Mr. Chokalingam into this conversation, and I'll ask one question to both of you. And Mr. Chokalingam, over the last 12 months, Nifty has gone up just 10%. That too, it has just like gradually moved up. Just to save its blushes, it's at a double digit, barely reaching there. Look at gold and silver. Silver with massive uptake of 200%, gold with 80%. Those asset classes have sharply outperformed. We've been reading stories of how Indian households, Indian housewives, they have come out as clear winners in this entire 1 year kind of a move, because they have bet big at every stage on gold, and silver now is becoming the new gold. How would you advise investors? Should one stay with the mania that Mr. Ajay Kedia pointed out, or should one now look at the correction that we've seen in the Nifty, maybe making it more attractive for the long term?
Yeah, briefly, I will present 3 points of view. Before that, definitely fundamental analysts will have a reputational risk in giving sell call on gold and silver. But that is my point. First of all, they are not driven by the fundamentals. Nifty is driven by fundamentals behind those Nifty stocks. And gold, absolutely no fundamental, is all investment demand, speculative demand. Even jewelry is, I consider as investment demand. Silver also, not 100% is driven by the fundamentals. There is a industrial demand, but that is not the most dominant. So that is the problem in giving any sell call. But two things one has to remember. In the last 2-3 years, after a lot of young investors have poured into the market across the world, every point in time, some asset is, driven up purely based on the perception. We saw in crypto, then we saw in US technology stocks, then we saw gold, now we are seeing in silver and also copper. But invariably, everything has corrected. So there is a possibility of profit booking coming in and the correction happening. And second, gold, if you look at, already there are reports of jewelry demand coming down very badly in India. And India is a major consumer of gold. So therefore, I don't know when it will start correcting. That depends upon the mass psychology of the people who are rushing to buy. But I am sure there is going to be very soon that there has to be significant correction. So I would advise caution on buying both gold and silver.
Okay. Ajay ji, what would you say? Markets or gold or silver at this point?
See, right now, overall, this rally which we have witnessed is because of bullion is being used as a financial asset class now. So that is why allocations are being increased. But from current perspective, I am expecting a correction. So I will stay away for Q1 at least. Let the prices should consolidate or have a correction of around 18 to 20%. Then we should review and re-enter. But still, long-term fundamentals still remain bullish, but after a correction.
Okay, let's try and understand what is a decent expectation, a normal expectation. Of course, gold and silver prices have crossed over any expectations or any imaginative numbers also that any analyst had. But let's try and understand from here. How much more move do you see for both gold and silver, Mr. Ajay Kedia? Let's try and talk about silver first. 3,82,000, it's already here. 4 lakh is knocking on the doors. Should one stick to just a 4 lakh mark, or do you see 5 lakh mark coming on silver this year?
See, exactly. One has to understand there is a concept of, we can say, parabolic gain.
Yeah.
But this time the structure has totally changed, because in 1980, 2011, industrial demand was very low and no one was looking as a financial asset for gold and silver. But right now, all clean energy demand has been continued to be there. Central banks and sovereign funds are behind silver. So I think there is a structural change in the demand. So maybe we can see 5 or beyond also. but there is a still we expect there is a chance of getting override this rally, because there was a statement from Longi, which is one of the biggest solar manufacturing from China, that they are reviewing their decision for silver to copper. So I think whenever this type of rally comes, the only risk for commodity is the substitution risk, and there is a high possibility that due to the severe run in the silver prices, maybe copper can catch up, or we can say some substitute demand would be there for silver also. So I am expecting a little bit correction. Don't be 100% invested currently in gold and silver. At least wait for at least 1 quarter. Let the prices should settle down. Then we should review again. Maybe we can see prices moving towards $150 or beyond that, but that will take time.
Okay, got that. So let me also ask you, if somebody wants to invest in gold and silver as part of the portfolios, say somebody had missed out the complete opportunity over the last couple of years, the golden years, the silver years of gold and silver were these last couple of years. And in case somebody missed that out, but is now trying to understand, like you pointed out, it is not just a safe haven, now being seen as a financial asset, now being seen as a core part of a portfolio that everybody must have as an exposure to. How would you advise that person, say if somebody has a 5-year, 10-year horizon and even beyond, what is the role that gold and silver should play in their portfolios from today?
See, historically, whenever we construct a portfolio, there was an allocation of hardly 5 to 6% for gold. But we know that bonds were also a part. But in last 5 years, we have seen bond is losing their rate. And secondly, no doubt gold was treated as a non-dividend paying asset class. But now, with the last 5-6 years, the rally is going on, de-dollarization is going on, central banks is buying. So now, what is happening? Family offices and other fund houses are trying that if we allocate gold as a passive investor, that will support our portfolio also. And whenever there is a rally, we can see a good rally in portfolio also. So I think previously it was 5 to 6%. Now I think we should review the things, and 18 to 20% allocation for commodity or particularly gold, silver would be right, because we have seen in last 3-4 years financialization of this commodity has been done, and that is why it should be portfolio should be properly rewarded by 18 to 20% allocation for with gold.
All right. Okay. Thank you so much, Ajay ji, then for being with us on the program and for helping us decipher whatever is going on in gold and silver, this unfathomable rally. But yes, we are witnessing it, and how should one be really looking at it in a very sane fashion and, identifying the right strategies going on from here. Thank you so much for sharing all those insights.
If you like the video, do like, comment, share and subscribe.